Farmers and ranchers and others, employees and investors have suffered. Their plight weighs on my mind every day. As the Chief Executive Officer of MF Global at the time of its bankruptcy, I truly apologize to all those affected. Before I address what happened, I must make it clear that since my departure from MF Global on November 3rd this year, I have not had access to many of the relevant documents which are essential to my being able to testify accurately about the chaotic days preceding the declaration of bankruptcy. The members should also understand that the committee turned down my request to testify voluntarily in January. I had hoped that by that time I would have obtained and reviewed relevant records so that I could be more helpful to the committee. While I intend to be responsive to the best of my ability today, without adequate time and materials to prepare, I may be unable to respond to various questions members might pose. Other questions, given my specific role in the company, will be questions for which I simply have no personal knowledge. Make it very clear, many of your questions may well be ones I myself have. When I joined the company in late March 2010, MF Global was primarily a voice-based broker that provided execution and clearing services for products traded in derivative markets on exchanges around the world. The firm had reported losses in 5 consecutive quarters before I arrived, and it had lost money in each of the previous 3 years. Upon my arrival at MF Global, management and the board, advised by an outside consultant, devised a new business plan. The plan was communicated to the public and provided, in substance, that MF Global would evolve into a broker-dealer and ultimately into an investment bank. The implementation of the plan was expected to take 3 to 5 years. I was hopeful about the prospects for the company, and I invested in it personally. Much of my compensation was in the form of options to purchase stock, which would have value only if the company prospered. In addition, on a number of occasions, I purchased shares of the company with my own funds. I never sold any stock. In the summer of 2010, I met several times with MF Global senior traders to discuss ways to improve the company's revenues and profitability. One of the ideas discussed was for MF Global to purchase short-term European sovereign debt using repos to maturity, known as RTMs. Before I came to MF Global, the firm had engaged in billions of dollars of RTMs with regard to U.S. Treasury securities, U.S. agencies, bonds, and corporate debt. It had also previously held billions of dollars of foreign sovereign debt positions. In the summer of 2010, we decided to draw on these experiences and to engage in RTMs involving short-term foreign sovereign debt. In these transactions, MF Global purchased foreign sovereign debt from a seller and sold the same to a counterparty with an agreement to repurchase the security from the counterparty at the maturity of the debt. When MF Global entered into the transactions, I believed that its investments in short-term European debt securities were prudent investments. MF Global invested in RTMs with respect to the debt of Belgium, Italy, Spain, Ireland, and Portugal. The first 3 of these were rated AA or better when MF Global invested in them. Even today, all 3 remain A-rated or better. Ireland and Portugal were lower rated, but they were largely backed by the European Financial Stability Facility and the IMF. I accept responsibility for the RTM trades. I strongly advocated that trading strategy. Nevertheless, it is important to recognize that MF Global's investment in these positions was the subject of internal discussions with senior managers, traders, and with MF Global's board of directors. Indeed, the trades were described, analyzed, and debated at multiple board meetings. I believe that the board members, all of whom joined the board before I joined MF Global, were independent and sophisticated. They asked hard questions and raised concerns. The directors approved sovereign risk limits for these RTM trades. At the time of the bankruptcy, MF Global was within these risk limits. The RTM positions were also publicly disclosed both in the periodic financial statements, which were reviewed by the company's counsel and accountants, and other public statements, including press releases and earnings calls. As of today, none of the foreign debt securities that MF Global used to engage in RTM trades has defaulted or been restructured. All of those securities that reached maturity while they were a part of the RTM position paid in full. In my written statement, I have attempted to describe the relevant contacts with regulators during my time at MF Global. As explained in that statement, I did not exert undue or improper influence on regulators. My communications were typically in the presence of various members of the regulatory staff, as well as my own colleagues. The late summer and fall of 2011 were extraordinarily difficult times in financial markets for almost all market participants. On October 17, 2011, the Wall Street Journal published an article that described a FINRA ruling regarding the capital treatment of RTM positions, which MF Global had disclosed on September 1, 2011. Other news stories followed. On Monday, October 24th, rating agencies began to cut MF Global's ratings. MF Global announced its quarterly earnings on October 25th. The announcement revealed that MF Global had lost $191.6 million in the quarter that ended September 30th. In light of the attention that has been given to RTMs and the reports that attributed MF Global's loss to RTMs involving European debt securities, it's important to note that the loss was not, and I'll repeat, not related to those positions. As I've explained in my written statement, the lion's share of the quarterly loss was a write-off of approximately $119.4 million that related to tax losses accumulated largely in the years before I arrived. Shortly following the earnings announcement and the ratings downgrade, some clients and counterparties withdrew their business from the firm. Others required increased margin. Firm's stock traded at sharply higher volumes and lower prices. Despite our best efforts to sell assets and generate liquidity, the marketplace lost confidence in the firm. Obviously, on the forefront of everyone's mind, including mine, are the varying reports that customer accounts have not been reconciled. I was stunned when I was told on Sunday, October 30th, 2011, that MF Global could not count for many hundreds of millions of dollars of client money. I remain deeply concerned about the impact that the unreconciled and frozen funds have on MF Global's customers and others. I simply do not know where the money is or why the accounts have not been reconciled to date. As the Chief Executive Officer of the MF Global Holding Company, I ultimately had overall responsibility for the firm. I did not, however, generally involve myself in the mechanics of the clearing and settlement of trades or in the movement of cash and collateral, nor was I an expert on the complicated rules and regulations governing the various different operating businesses that comprised MF Global. I had little expertise or experience in those operational aspects. In short, I do not know which accounts are unreconciled or whether unreconciled accounts were even subject to the segregation rules. Moreover, there were an extraordinary number of transactions during this period, the last few days of MF Global. And I do not know, for example, whether there were operational errors at MF Global or elsewhere, or whether banks and counterparties have held on to funds that should rightfully have been returned to MF Global. I am sure that the trustee in bankruptcy, the SIPC receiver, and the regulators are working to answer these questions and to understand precisely what happened during the firm's last days and hours. As the Chief Executive Officer of MF Global, I tried to exercise my best judgment on the behalf of our clients, employees, and shareholders. Once again, let me go back to where I started. I mean this with all sincerity. I apologize, both personally and on behalf of the company, to our customers, our employees, and our investors. I truly know they are bearing the brunt of the impact of the firm's bankruptcy. concludes my prepared remarks, and I'm willing to answer your questions.
Thank you, Governor. And I now recognize myself for 5 minutes. And you've served in the role in congressional oversight before. You know we have an obligation to get to the facts, to address the uncertainties in the market and address whatever laws may need to be focused upon. Thousands of your former customers across the country are experiencing a severe financial hardship because of the events that occurred under your watch. Many of those customers are the very farmers and ranchers I represent in Oklahoma, and that this committee represents in the House of Representatives. The fact that their property is missing is alarming and, yes, disheartening. The fact that they've lost confidence in the futures market may have a long-term impact on hedging practices of the agricultural community. And, Governor Corzine, many of our constituents, I'm sure, the 3,000 or so people that used to work for you, are watching today also. And they're looking for answers, too. I suspect you may have some of those answers, and so I would like to ask you to answer these questions to the best of your ability. Mr. Corzine, is there a shortfall in the customer funds that MF Global was legally required to keep segregated?
Mr. Chairman, I know only what I read, and it certainly was true on the late evening of the 30th of October that there were unreconciled accounts.
To the best of your knowledge, based on your time at the company before you left, why is there a shortfall?
Well, there are, Mr. Chairman, many transactions that occurred in those last chaotic days, and I am not aware of all those, nor do I have the information to be able to look at those transactions. And as a consequence, it would be very hard for me to speculate why or where that shortfall took place.
Let me ask in a very precise fashion. In your role at FM Global, did you authorize a transfer of customer funds from these segregated accounts?
I never intended to break any rules, whether it dealt with the segregation rules or any of the other rules that are applicable.
Are you aware of any transfers, authorized or unauthorized, of funds out of customer accounts?
I'm not in a position, given the number of transactions, to know anything specifically about the movement of any specific funds. And I will repeat, I certainly would never intend to direct or have segregated funds moved.
At what point were you made aware that customer funds were missing?
As I said in my statement, Mr. Chairman, the first that I heard of the many millions, hundreds of millions missing was on Sunday night.
I'd like to discuss how a company that's been around for 230 years fails, to the surprise of its customers and investors, and based upon press reports and your testimony, under your direction. FM Global's sovereign debt position increased steadily. In fact, it's been reported that MF Global's exposure went from $1.5 billion at the end of 2010 to $6.3 billion at the time of the bankruptcy. So let me ask this, Governor. Who's Michael Roseman?
Michael Roseman was the chief risk officer of the firm preceding my joining the firm, and was up until the end of 2010.
Explain to me what a chief risk officer does.
Chief risk officer represents the board of directors in administrating the delegation of authorities that the board assigns to the activities of the firm, and look at market risk, credit risk, operational risk. He consults with the board and consults with management.
Is it true that Mr. Roseman on multiple occasions, both directly to you and to the board, expressed concerns that MF Global was overexposed in European sovereign debt and that the firm did not have enough capital to withstand potential losses those positions might impose upon the firm?
Mr. Roseman certainly had a different view about the sovereign default risk associated with Euro sovereigns, and particularly in the context that we did other business in those countries, and he expressed that to me directly. He expressed that to the board.
Did any members of the MF Global board express concerns to you with the level of risk accumulating in the firm's portfolio?
There were multiple discussions, as I've said in my testimony, most of which I think, once I have access at records, will be documented in the minutes of the board meetings about this subject. And there were people who dissented in the debates and then sometimes supported actions that we were taking after those debates. Sometimes there were people who did dissent. I don't know the exact elements, but generally we arrived at a consensus.
Is it true, Mr. Corzine, that you threatened to leave the firm as CEO if the board did not trust your judgment?
Mr. Chairman, I did not threaten the board that I would leave. I had one specific conversation with the lead director, which could have been interpreted that way, in the sense that I said if the board, using the powers that it held, had lost confidence in me, I'd be willing to step down.
Mr. Corzine, I understand that Mr. Roseman was no longer Chief Risk Officer after March of this year. Were you involved in that?
This is the MF Global hearing, everyone, and we will continue that in the next segment. But what we always want to talk about is that a firm like MF Global that have been around all these years, and everything that we even teach at SMF with individual people is risk management, stop management, entry management, profit management, and all the skills that it takes that everybody does not listen to is how do I manage risk on entries, exits, stop dollar cost management risk, getting on the right side of the market, pairing risk. This is what happened. And it happened with the firm that had been around, you heard what the guy said, over 200 years. And there's a huge impact. We'll be having a lot more discussions about what some of the regulatory statuses are and how they're supposed to be compliant when they have that much money out there on the line betting on Europe. And Mr. Corzine admitted, hey, it was a bad trade. Okay. Well, there is a difference between a bad trade and bad trade didn't have risk management. Let's call it a fact. The other thing of it is, and so the admittance is okay. The thing about it is, though, is how does one, or forward-looking, going to find out where all of that money is and the damage that the unaccounted, allegedly, $1.2 billion is missing. We will convene for now and restart a new tape and a series and a radio show that will go along with this whole debacle.